following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
Mark Longo here from the Options Insider Radio Network and theoptionsinsider.com, and I'm breaking in to your regularly scheduled program to give you guys an update on our Options Insider educational series. Now, a lot of you guys have been asking us when we're going to do something else like our groundbreaking unusual activity forum that we held back in May at the CBOE. Well, mark your calendars for December 7th, because we're diving right back into the educational fray with an epic event on that Saturday, December 7th. We're going to break down the retail options trading landscape with 3 seminars held in partnership with our friends over there at optionpit.com. We'll break down the key mistakes that cost retail traders real money in the real trading marketplace, as well as how to properly implement and manage and adjust some really critical strategies like debit spreads, credit spreads, collars, risk reversals, butterflies, covered calls, the whole 9 yards. And best of all, this is going to be an online event, so you can join us from the comfort of your own home in your favorite bunny slippers. Don't miss this epic educational extravaganza with 3 seminars from 3 of the leading names in the business. Reserve your seat today at theoptionsinsider.com/events. And now I'll return you to your regularly scheduled program.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from a little thing we like to call around here the old Options Insider Radio Network. And if you haven't had a chance to check it out, I recommend you do so right away. The Futures Options Roundtable, the latest addition to this here fine network. I think if you like this program, you're really going to like it. And also, if you like this program, set aside some time on December 7th, Saturday, December 7th. It has been in the past a day that shall live in infamy, and it might be infamous again, but for many, many other reasons, including the fact that we here at the Options Insider are bringing back our educational series. We're partnering with our friends over there at Option Pit to put on a great, epic educational extravaganza, 3 epic educational events, and best of all, you can get them all from the comfort of your own home, as Alex likes to say, in your bunny slippers. A lot of you asked last time we did a big event. It was at the CBOE. You had to kind of be there in person. A lot of people came in from all over the country. A lot of people also emailed in saying, hey, we couldn't make it. Are you guys going to ever have some events online that we can access? Well, here you go. It's a great event. It's going to run down all the stuff that a retail option guy really needs to know to be successful in this marketplace, a lot of the key mistakes you make and how to avoid them, as well as how to manage a lot of the key positions that you guys are going to utilize on a daily basis. So check it out, theoptionsinsider.com/events, or head on over to optionpit.com/events. You can find out more and register and claim your seat Saturday, December 7th. Be there, or indeed be square, like our first member of the All-Star panel, One Square Mark Sebastian from OptionPit.com and Swan Wealth Advisors. Mr. Sebastian, welcome back to the program, sir.
And boy, is he square.
That's what I say about you all the time. Someone wrote into the show the other day and said, "Why do you call him the greasy meatball?" And I said, "Well, have you listened to the show? Isn't it kind of obvious?" But apparently not.
We just kind of pulled that out. I think I pulled that out of my butt at one point in time.
I remember I know the whole greasy meatball story.
All right, what was the whole greasy meatball story?
I was doing an analogy on some type of analogy on how Subway somehow made themselves out to be the fast food place.
Uh-huh.
And my point was you can get a greasy meatball sandwich at Subway just as easily as you can at any other place. And then Mark said, the greasy meatball sandwich. That was my nickname in college. and Longo would not let it go.
Nor should he. I think it's a great nickname, you know?
It is great.
You know, I've had many nicknames. Drumstick, that was one that I liked. Captain Planet, that was more in my environmental days. And, of course, CEO of Gymboree Enterprises.
Yes, that was a very, very brief flirtation you had.
Yeah, that background check, darn you.
It lasted all of about 3 hours till the police came.
Exactly, and then they said, you know what, you've got some sort of weird red flag Amber Alert thing on your background. We can't have that. I said, well, I didn't know that was a part of the whole process.
Listeners, if you didn't recognize it, that voice was also the voice of Uncle Mike Tosaw from RCM Asset Management. Uncle Mike, welcome to the show, sir.
Thank you. It's always a good day when Cisco's down 10%, in my opinion.
I knew you were going to be harboring a little bit of secret joy there. I had a feeling that would tickle your fancy. And listeners, if you're wondering why we're sounding like we're in a cave today, well, Uncle Mike is using the magic of cell phone technology. And Sebastian just has the Skype gods not smiling upon him today. So everyone sounds like they're kind of in their own little coffin post Halloween here. So just bear with us, listeners, and we'll still get you out a show as you may expect. Just perhaps a little bit tinnier than usual, which is saying something for Mr. Sebastian. All right, with the gang mostly assembled, the Viceroy couldn't make it, but he sends his regards. He has some other pressing business to attend to, but he'll be back next episode. And now we're going to keep on rolling right on into the trading block.
The trading block.
All right, everybody, welcome to the trading block. This is, of course, the portion of the program where we break down what was trading, what was lighting up the old tape today. It was a bit of an interesting one. Most of the day spent to the upside on most of the major indices. S&P leading the charge up about 0.5% or nearly 9 handles to 1790.5 roughly. The Dow up nearly 0.5% as well to 15,876. The NASDAQ, a bit of a laggard today, only up about 0.25 percentage point to 39.72. And the VIX cash coming off about 0.1 point as well. So not the most aggressive day. I think a lot of that bump didn't come from earnings, certainly, because the earnings weren't exactly lighting up the tape. We had Walmart essentially giving us a bit of a tepid outlook for the future. You know, whenever Walmart can't make money, the economy is not exactly booming. And also, as Uncle Mike said with a little bit of glee in his voice, Cisco taking it on the chin. Is Cisco? I'm still assuming Cisco at 21.5 is nowhere near the level where you would ever want to participate again.
If it gets down to single digits, I'll look at it. I hate Cisco now.
It would just be a revenge trade at this point for you, wouldn't it?
It would be, and that's the revenge trading, as we all know, is the sure road to prosperity, right?
I've made quite a living and lost a few livings as well doing exactly that.
Well, you know, one of the interesting things about Cisco is how much it outperformed its straddle price. Its straddle price was pricing in about $1.20 move, and it moved more than double that today. Just an ugly day for Cisco, and if looking at the stock, I think there's a strong chance that you see this thing continue to rally, and much like my maturity, this stock will likely be a teenager.
Well, it wasn't that long ago that it was a teenager, and it was hovering around the 15 handle for quite a while. Then it's had a bit of a run to the upside, as the rest of the market has as well. Cisco has kind of caught a bid. It's interesting you mentioned outperforming the straddle, because that certainly has not been the narrative for earnings season so far. You know, we talked way at the beginning of earnings season, Google blowing the doors off its straddle and really, really doing well. Since then, a lot of people were kind of loading up for other home runs and other names like Apple and got creamed. And pretty much every other name we've looked at, we joked about it last week, actually. I think there were 4 or 5 names we profiled in succession there, all of which dramatically underperformed their straddle. So for the most part, Google and Cisco aside, it seems like this was a premium selling earnings season. Would you concur there, Mr. Sebastian?
Yeah, it's been a real interesting year. Yeah, we've had a couple of stocks just blow everyone out of the water, and then every other stock has been like what earnings season's been like. You ever had like a big air bubble built up in your butt, and you're almost 100% certain that it's going to be the loudest, craziest passing of gas that it's ever happened in your life, and then you get ready for it, and then it's completely just kind of passes through, and there's no real noise to it. That was what Google did to earnings season.
This is the quality analogies we come to expect from Mark Sebastian, which is why the greasy meatball name has lingered, listeners, in case you're wondering. There you go. It has some life to it for a variety of reasons, that being just one of them. Of course.
It really is a good analogy, though, if you think about it.
Yes, if you spend some time thinking about it, it does make a certain sort of bleak sense, I suppose. Before we go too far down, exploring the rabbit hole of that analogy, we'll move on very quickly. Of course, the big news today, we're recording this on the afternoon around 3 p.m. Central Time here on November 14th, which is, of course, Twitter Options Eve. A lot of people getting really, really excited and really, really... Of course, last week was the big day for the IPO and for the equity traders. This, a week later, is really kind of the IPO for the options traders. This is where you guys can get a chance to really sink your teeth into Twitter. I know a lot of the brokerage firms are really excited about this because they're hoping it's going to kickstart some volume. And I imagine you guys as well, Mike and you, Mark, your clients and mentees, I'm sure there's been no shortage of questions about Twitter. Mike, we'll start with you maybe because this is probably a little bit more of a kind of out there for some of your clientele. Any of your people calling up the Apple devotees and others and saying, hey, how do I get a piece of this Twitter or one of the options trading, or are they kind of playing wait and see with it?
Oh, there's definitely a lot of interest in Twitter and something like this. And I'm probably going to wait another week or so just to kind of get a feel for what actually happens instead of trying to guess, well, this is going to happen, that's going to happen. I think it makes sense to just kind of take a look, and good trades will be there a week from now just as they will be tomorrow.
And what about your folks over there at Option Pit, Mark? I imagine you and particularly Andrew have just been up to your knees with questions about Twitter options and,
when are they going to list? 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 And then mostly because everybody wants to come up with some sort of bearish spread that they can put on it, which, when you look at it, makes some sense based on that valuation.
So you're saying not a lot of Twitter bulls in the Option Pit community?
Not a lot of Twitter bulls in the option pit community. So, and they're usually pretty gauged. The audience that we carry is relatively intelligent.
Yeah, I imagine you guys cater towards the higher end of the spectrum, and they tend to lean perhaps a little more cynical on some of these issues.
We're like the Heidi Fleiss of option pit, of option education firms.
So does that mean you're going to leak the names and info of all your clients out to the press and to the police at the appropriate time?
Well, yeah, to get a plea bargain, of course.
You got to do what you got to do. So keep that in mind if you are indeed a client of Option Pit. We'll have a mail question a little bit later dealing with the specifics of Twitter options, so we'll get to a little more of that in a little bit. Uncle Mike, what else aside from the hubbub and furor about the upcoming Twitter options and, of course, the Fed causing some noise today? What else is lighting up your personal tape over there at RCM?
Well, I don't know if it's necessarily something from a specific stock standpoint, but with Obama talking today, now you are going to be able to keep your plan if the insurance companies go for it. I mean, there's a lot of confusion going on with Obamacare right now, rightfully so, because it's out there. And I'm just kind of curious to see how a lot of these health insurance companies in the coming weeks are going to react to this.
What was the consensus from your webinar?
We don't know. There's a lot of... We had a record turnout for our webinar, the biggest non-option-specific webinar turnout we've ever had. And the consensus is that for the most part, if you work for a big company, it's not going to be a big issue. So in other words, if you work for an IBM, a McDonald's, or something like that, health insurance isn't going to be much. There's not going to be much change to it. But for people that work for companies of 50 or fewer employees, or for individuals, that's when it's going to be. It's going to be unknown. And in that situation, you have to just make sure that you manage risk in whatever way you can. I'm personally in an individual plan, and I've never felt more like an option trader in my entire life than right now.
Yeah, anecdotally, not to turn this into the healthcare cast, but anecdotally, I have been talking to quite a few people who, all of whom are probably in similar boats to us here on the show, who run their own businesses or have their own plans, and everyone pretty much has gotten a letter from their provider, it seems like, in the last few months saying, yeah, that plan you have now is pretty much no longer valid. So you're kind of left twisting in the wind to kind of wonder, what the heck do I actually do with this stuff? Or if you want to get the same thing, it's going to cost a lot more or come in some different package. So a lot of fun stuff to sort through in the coming months. Thanks again to government bureaucracy.
Well, it is also because, and today, Obama says that now, for 1 year, you're going to be able to keep your plan. So it's like I was talking with our guy who does all this through RCM, and so I said, okay, what's going on with everything today? He's like, well, I'm going to have to wait till Monday now, because now if you can keep your plan, that changes everything. So this is like the 5th time that everything's changed. So it's a never-ending saga.
Maybe we need to have a separate show on the network, the healthcare option. Who knows? Might be a popular thing. Mr. Sebastian, what else is lighting up your personal tape, either with the clients over there at Option Pit or what you guys have cooking over there at Swan?
It's just been, we've been a little caught off guard by this big leg up, this second leg up. We thought 1750 to 1770 was going to be the range. But I think a lot of people are looking at names like Tesla and seeing some weakness. And, my guys are looking for where they can get in a low-vol environment, where is the cheapest of the cheap? And then against that, once you find something cheap to own, people are then trading around that to try and find things that are more expensive to sell. That's been a really effective way to trade this market. There's a few names. Chipotle is extremely cheap. Harley-Davidson, the financials are the cheapest of the cheap. And then the more expensive stuff is tech. So Facebook, Apple, Amazon, Google, those are all names that are we think balls overpriced.
I've joked quite a bit about Chipotle being the stealth Apple on the show, but it actually almost is identically at the same level as Apple right now. So you could do that one-for-one swap. Chipotle actually having a little bit of a premium. It's like about a $20, $15 premium to Apple right now. So there you go, listeners, if you want to do your one-for-one swap.
Although its vol is cheaper, significantly.
There you go. Buy burrito vol, sell that garbage fruit company vol.
Yeah, well, there you go. Nobody ever, buy the burrito, sell the apple. There you go. Think about American society. Do people want to eat burritos?
Talk about all the gas analogies, then.
Right. Everybody I know says burritos.
No one ever went broke buying burrito vol. That's all I'm going to say. There's gold in them there beans.
Agreed. A good burrito straddle makes some sense. As long as you're not choking on burrito, you'll be okay.
I like it. Before we stretch this burrito analogy any further, I think we're going to keep on rolling right on out of the trading block and right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the Odd Block. That funky tune should let you know that it is time for all of us to don our fedoras and dive on into the seedier side of the options business. We're going to kick things off with something that we actually highlighted on the site yesterday, and it just blew up on the site. and on Twitter and everywhere else, kind of as expected. Whenever you talk about VIX, it seems like it's just it's a home run from a click-through perspective, and this certainly was as well. We saw someone really just I jokingly referred to him as a crazy call buyer, but not too far off the mark yesterday, just coming in and just gobbling up upside all day long yesterday in the VIX. It started off in yesterday with the Feb 21s. We saw a boatload of those going up for about actually 50,000 of those going up for price around, looks like $1.35. We had open interest of about 23,000 contracts on that strike, so that was all opening paper. We had a bunch of blocks, pretty sizable chunks. These went up in like 2,000 contract blocks. So the total could have been, I have to check the totals. It could have been up as high as 80 on the day for the total on that strike. And then we saw more people piling in later. I'll have to check my dates. This might actually be, if the first Feb 21s might have been 2 days ago. I'll have to go check and make sure I have the right days. And then yesterday, paper following up with the Feb 21, so a couple of days worth of upside love in VIX land with the Feb 22s lighting up the tape, and about 40,000 of those going up yesterday for prices around $1.20. We saw them going up on splits again. We saw, open interest is only 5,800 contracts, so people just seem to be loving the upside here in Feb. Let's look today on those strikes. The Feb 21 and Feb 22 strikes now, there are 100,000 contracts open on the Feb 21s and about 93,000 open on the Feb 22. So a lot of love on the upside there in Feb. Surprisingly, not the strike with the most open interest in Feb. Looks like there might have been a Feb 24-29 vertical that went up at some point because there's about 170,000 contracts open on each strike as well. Regardless, a lot of upside love. Mark, what is it with February and people flocking into crazy upside? If you remember last year, we saw even crazier. I think it was the 70s or 72s people bought a ton of last year, and now we're seeing people flocking into much more reasonable compared to what we saw last year, but still a lot of crazy upside. What's your take here on this guy just gobbling up all the upside all day long here?
I think now the one thing you got to remember is February expires into what the VIX is perceiving for the next 30 days. All right? Now, let's think about what deadlines are within 30 days of February's expiration. Let's see. There's this thing called dysfunctional government. There's this thing called earnings season. There'll be some sort of non-farm payroll. That's where people are betting taper might occur. Basically, that February time period, if you look at the curve, is where all of the risk is backed into. February, March, and April. Everything in front of it is kind of oversold. Everything behind it is solidly bid. The March contract in the SPX is a full point higher plus relative to Feb and Jan, and that's the main reason.
No, you're right. People kind of tend to forget that what the VIX is actually looking at, and it's not Feb vol, it's 30 days plus. It's that forward/future that they're looking at there, and people tend to forget that in their analysis. So you're right. Into that March time frame, there is a lot of stuff cooking in that area. I wouldn't say it's a cheap way to get a spec on it, but it is a way to get a spec on it. You know, we've talked many times in the past about our viewpoints on buying VIX upside. If you want to kind of hear us discuss it a little more, Mark and we had a guest on from the CBOE, Russell Rose, on the most recent episode we did of Volatility Views. I encourage you to check that out. We walked through a lot of different use cases of exactly this scenario, buying upside calls in VIX and what you should use that for and what really it isn't that useful for. And I was surprised to even hear Russell admit that it really isn't the hedging tool it's been put out there to be, but really it is, like we've said on the show many times, it's a kicker. So hopefully this guy has something else working, and he's putting this on as some sort of substantial kicker to maybe.
Well, where Mark is the hedging tool is really not to the retail public, but to the institutional public who are using it to hedge against, big upstairs trades. And then the other area where I think that using VIX versus SPX as a hedge makes a lot of sense is for people that have, that are trying to hedge multiple asset classes at once. So you're hedging oil and pork belly and equity all at once. Well, VIX is a good way to try and encapsulate all of that.
Yeah, it's pretty much one of the only tools you can really get any sort of approximation for that. Now, Mike, I know we've talked on the show in the past. You take a dim view of these types of trades. Is there a scenario you could think of where you would do something like this, where you would add a VIX call or vertical as perhaps a kicker to something else you're already doing, or perhaps as just the trade in and of itself?
Well, yeah, definitely for sure as a trade in and of itself. If that's what you're looking to do in the spec world, I think it's something with which you can do. The main thing that what everyone liked about the VIX when it first came out is it was a cheaper way to hedge. Because if you look at the movement percentage-wise of the VIX versus the downturn of the S&P 500 back in '08, percentage-wise, obviously the VIX did a lot more, so you didn't have to buy a lot of premium in order to achieve that hedge. I like it from the standpoint of, number one, a speculative thing. Also, I think it can work as kind of like a pairing thing. Let's say that you're speculatively long the market in some way, shape, or form, and you want to have some type of a cheaper way to do a straddle in one way, shape, or form. I could see that, but if you're using it against your nest egg in the retail public, not a fan, just because of the fact that it doesn't always match exactly as you would like to. The other way with which I would like it is just kind of add to what Mark had said, was let's say that you have a lot of puts on SPX and you want to create some other type of additional hedge because of the fact that maybe the 1740 puts on SPX, you created so much volume in them because you're an institution, you got to look elsewhere. I think the VIX is a good place to look.
Yeah, I'm just checking here to make sure. And yeah, the VIX, the Feb 21s went up yesterday, and the 22, so it was a double day. So they both went up yesterday, which would be November 13th or a Monday. So interesting paper. Lighten up the old tape there in VIX. Now we're going to move on to something just from a size perspective, not as impressive, but still perhaps holding some potential. A name I don't recall us having discussed here on the show in the past. This is Tile Shop Holdings, Inc., ticker symbol TTS, one of my favorites, I know. Closing today, $12.95, taking it on the chin, down a whopping nearly 40% or $8.50 roughly. So just taking it really on the chin today here in TTS. It's not even from earnings. Earnings were back on the 28th. It's just looks like some sort of negative news. I don't know. They reaffirmed their guidance. Looks like that's usually a good thing. Apparently not in this case. So taking it on the chin, getting just crushed across the board. Usually in a scenario like this, you'd see people flocking into puts, and we did see some puts trading here in the deep in the money puts now. It was like the Nove 20s, nearly 2,000 times today. But we also saw, perhaps surprisingly, someone piling in on the call side of the fence, maybe perhaps speculating that this crushing is a bit overdone. We saw someone piling into the Nove 15s for looks like a bunch of different prices. We had a block go up earlier in the day of about 550, and then we saw another 2,600 or so going up after that, and prices ranging from 50 to 80 cents. So as you can imagine, a pretty wild day out there. Also a pretty wild day in the prices that they're getting in this name and in this strike. But someone apparently betting on these are Noves, so someone's betting that we're going to have a relatively quick pop back here. These are, of course, 2 days to go options, zero open interest. So someone taking a heck of a flyer that these options that have actually no value at all right now are going to be worth something in the next 2 days. Mr. Sebastian, you guys been watching TTS over there at?
Well, I was thinking maybe it's a hedge against. The guy short it and wants to protect himself against the short squeeze. Only reason I could think for a trade like that.
That would certainly be maybe a little bit more logical than just flying out there. But either way, even if that is your intent, I don't know if I would choose these unless you're just so concerned about the next 2 days. And then
maybe that's your time frame to be short. That's all I'm saying.
Yeah, exactly. Maybe I guess if that's the only way you got it on, and you're really just concerned until through expiration, then a flyer on these. That's also he put some serious cash out to take that risk off the table. So either way, perhaps he is locking in his his profits from the or hedging his profits from the 15 strike. Either way, an interesting trade. We'll put this one in the to be watched category for a couple of reasons, not just the fact of the near term nature of it. It's a fun one. We can see what happens of it really quickly, and then also we can kind of look back on some other developments in this name in the next couple of episodes. All right, and that is going to do it for the odd block. And now, I said the Viceroy couldn't make it, but in his stead, we are going to do what I think a lot of people have been waiting for us to do. Everyone's favorite trading game. It's where I play Stump my fellow all-star panelists. And in light of what day it is today, we're going to be playing the Trading Patterns guessing game for Twitter in the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, welcome to the Express Block. This is usually the portion of the show where Alex takes the reins and I take a bit of a rest, but we're going to skip that today because it's time once again to play Stump the panelists, and you guys put your guessing hats on because we're going to play the guessing game today for Twitter. I think you guys can handle this one. This was not perhaps as difficult as some of the other ones, so you might be able to get at least a couple of these right, I would hope. So, Uncle Mike, put your guessing hat on because we're going to start with you.
I'm going to go give you two guesses. One of them's a sure bet, and the other one's a long shot. Sure bet, I'll go with Facebook. Long shot, I'll go with TLT.
Interesting. So you're playing the sure bet, and you're playing the flyer. I like it. I like the way you're taking a little bit of risk there. You're not just going for the low. You do a nice little base hit, and then you're swinging for the fences too. I like it. So first off, Facebook, well done, sir. Number one, ding ding. The number one correlated underlying. And in case you guys haven't heard this game before, I'm sure you have, but this is, of course, we are guessing what the clientele over there at Options Express is also trading when they're trading Twitter. This is, of course, from an underlying perspective. The options haven't listed yet on Twitter, so this is pure underlying. And the number one correlated asset amongst the OX clientele is indeed Facebook. TLT, unfortunately, though, the flyer not rewarding your risk, sir. Nowhere there on the chart. So well done. You get points for the number one placement. All right, Mr.
I had to go with both of them. I was hoping maybe I could catch some people doing some options on TLT, but oh well.
That would have been impressive. I would have given you extra points for that. All right, Mr. Sebastian, what is your strategy? Base hit, or are you swinging for the fences?
I'm going to go the little fruit company named Apple.
Yeah, usually if you guess these two, you usually do pretty right, and you guys are indeed number one and number two. So you got the first two. Well done. A home run and essentially a grand slam. Now we're going to get a little bit deeper into the weeds here and see how you guys fare for some of the rest of these. Uncle Mike, what's your next guess for number three?
Google.
Nice, not bad. Not a bad guess. I probably would have gone that way maybe myself. Unfortunately, no, it is nowhere near the top 10. So if I had a buzzer, I would be ringing around. Maybe I should add a buzzer for this part of the show.
Oh, that hurts. Oof. I was hoping for number three there.
That would have been something, a little bit of a flyer, but no. Seemed like a safe bet, but no. Mr. Sebastian, what is your next guess, sir?
I'm gonna say, Mark, I'm debating between Priceline and GLD, and I'm gonna say Priceline.
Another one you think might be in that category, and yet no. In fact, I will even go so far as to answer your other one and say to GLD a resounding no. Now we'll guess a couple more, and then we'll roll on to either the strategy block or the listener mail block. Let's see. All right, one more guess, Uncle Mike, and see if you could. Your choice. You want to go crazy? You want to go? There's some names here that are crazy, and some names I think you could pretty much guess.
Let's see. I'm going to go totally off the wall crazy here. Goldman Sachs.
Interesting. Would not have been one of my first choices, and I guess that would have been the right instinct because it is nowhere here on the list.
What about BlackBerry? Is that on that list?
No, that one is not on there either. I will give you the rest of the top 10 here for the OX clientele in Twitter. So we had number 1 was Facebook, obviously. Number 2, Apple. Number 3, Tesla. I think if you pick a lot of the retail-friendly names at OX, those 3 names are going to be the top 3 for a lot of them. Number 4, NQ Mobile. Ticker symbol NQ.
Oh, yeah.
I wouldn't have guessed that one right away. Number 5.
You know what? I should have thought of that one.
Number 5 is a no-brainer, the Widowmaker, Netflix, always in the high levels for names like this that are very retail-friendly. Number 6, another kind of weird one, SKTO, SK3 Group. Number 7 is Voxajet, VJET. Number 8 is Oxygen Biotherapeutics, so people playing out in the weeds on that one. Number 9, of a name we've talked about. Number 10, both names we talked about a lot, Solar City and First Solar. So there you go. That is for this Twitter options launch eve. Those are what people over there at OX are trading in addition to trading Twitter. All right, that is going to do it for the old Express block, and now we're going to keep on rolling into the Uncle Mike mobile strategy block.
The strategy block.
All right, listeners, this is usually the portion of the show where Uncle Mike comes on down from the mountain, tablet in hand, ready to dispense wit and wisdom. Today, he's taking it the extra mile, and he's also dispensing wit and wisdom to all of his fellow compatriots and commuters there on the train. So hopefully they're big fans of option strategies, Uncle Mike. What do you have in store for us in this mobile edition of the strategy block?
Well, this will be interesting to say the least. When to roll up a call on a diagonal call debit spread. We talked about this a lot from the covered call standpoint, but I want to go over this today in terms of looking at your overall position risk and position delta on a diagonal call spread. Let's say you're long-term bullish, and by long-term I mean maybe 6 months, so you buy a 6-month call option, slightly in the money. And you want to sell a little bit of premium so you don't have time decay working against you, so you sell an out-of-the-money call option. Now the stock goes up, and then theoretically the diagonal spread goes up. Everybody wins. Now, with a covered call, if you have a stock as the underlying, you can let that stock go to infinity, and it really doesn't matter because you're capped at whatever your short call strike price is. However, the diagonal spread's a little bit more tricky than that. I had a conversation with a client on this recently, and his diagonal spread went in the money a little bit too much. And so he's looking at it, saying, oh, okay, I'm bullish, and the stock went up, and this wasn't one that I was managing. It's just one that we were talking about one day. And how come I'm losing money when the stock goes up and I had initially a bullish position? Well, folks, a diagonal spread can turn bearish if you let it go up too much, from the standpoint that the time decay with which exists in the long call will gradually become less and less. And the intrinsic value that you have in the long call as it goes up will become mitigated more and more by the short call with which you sell. So, moral to the story, or what you really need to look at if you're trading diagonal call spreads and you're slightly bullish, which I know a lot of people that listen to the show probably are in one way, shape, or form, or at least they're do this strategy, if it goes in the money, you have to be nimble. A general rule that I have whenever a diagonal goes in the money, I'm still hesitant to roll up, and I think, well, I think it might pull back a little bit. I don't want to roll up my call just yet. I like to look at the deltas on it. I like to look at the position delta. And a lot of times when I initiate a diagonal call spread, the delta will be probably 25, 30, something along those lines. I'll usually stay in it until the delta goes to zero. The reason being is that if you have a delta neutral trade, that takes away the original objective. And if the stock continues to go up, then all of a sudden you're bearish when you were trying to be bullish in the first place, and you're going to have all sorts of mental torment on yourself and trying to figure out what to do if you let it go in the money too much. So, moral for the day, monitor your diagonals closely, and if they go in the money a little bit, have a plan of when you're going to adjust, roll up, or simply get out.
I think that goes back to the Ronco mindset a lot of people have when they put on spreads, particularly verticals and diagonals for whatever reason. They have this set it and forget it mindset. You put this on, you know what you think is your maximum gain and loss because everyone's been taught through expiration graphs how options work, and they kind of just let it go. And they don't get into the adjustment territory we've talked about many times on this show, and as you just outlined, that is where the rubber meets the road for a lot of these spreads. And if you let these diagonals get away from you sometimes, what you initially put on and what you have as a resulting position are perhaps not exactly what you intended. So it's certainly good advice there, Uncle Mike, and I think all of our listeners appreciate it, and appreciate you taking the time to pester your fellow commuters with some options knowledge. All right, and because we are a show light this week because of Veterans Day, we'll take a quick second here to answer a question in the old mail block as well. It is quite a timely one. A lot of you writing in with some variation on this question having to do with Twitter.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, and you know the drill by now, mail block. This is the portion of the show where you guys get your chance to sound off and chime in on the old show. A lot of you guys writing in with variations on this theme. The one we picked came from Ham Shack. I like that. Good handle. And he writes, I've read some articles that say Twitter options, particularly the put options, will be very wide and expensive on the launch day. I can wrap my head around wider spreads for a new issue, but why would the puts cost more? Is it just a question of bears bidding up the volatility? Great question, Ham Shack. We got a lot of these coming in, and you're right. It is pretty easy to wrap your head around the wider spreads in general because it's a new issue, first day of trading. Not going to be the most liquid name, and the market makers take a while to kind of feel the stuff out. But the second part of your question is a little bit more interesting. That's, of course, the puts. We've talked about this a little bit on the show in the past around some other big IPOs like Facebook and others. This is a scenario we see quite a bit where right after these options list, you see some of these names, particularly these ones that are illiquid and hard to borrow. You start to see this extravagant put wing, and people assume, oh, people are just bidding up those puts. And that is part of the cause, but also the fact is, remember, this is a name that is still very thinly traded and extremely hard to borrow. So if you want to come out and short Twitter, it is a difficult and expensive proposition to do that. Market makers, they're not immune to those market forces. If they want to hedge with short stock, they have to borrow it just like you, and they have to spend an exorbitant amount of money, more than they probably would in other liquid names, to do that. So when that happens, you're going to see that cost reflected in the put wing. Remember, you're buying a put. You're buying an option to sell that stock. The market maker just can't give you free short stock. I wish it worked that way, but it doesn't work that way. His costs have to be passed along to you, and that usually is reflected in the prices of that put wing. And we'll probably see that on the open tomorrow around Twitter. We'll see if things start flattening out, if the stock is a little bit more accessible in the days to come. That will usually go away. Sometimes it'll even go away in the same session, but usually takes a couple of sessions to do that.
We know that the borrow is probably going to be too high when that thing first lists, and then it'll probably come off. But dealing with that borrow can be a little problematic. You know, that can be an issue. So that's just something you need to be aware of, is that, yes, the borrow will come in, but there's a reason it's completely jacked up.
Yeah, people tend to forget that when they're diving into these new listings, that there are these fundamental things underlying these option prices that sometimes they let slip away, like the fact that you have to factor in that cost of borrow if you want to short these stocks. Uncle Mike.
And if you all become a Canadian, by the way, you have to price in that cost of borrow. We sound Canadian. Just saying.
I was getting into my Montreal phase. I do that once in a while.
Oh, you turn it? Yeah. Well, it didn't sound very French Canadian to me.
You know what happened? I used to trade with a bunch of Canadians. I think they kind of infected me sometimes.
I get that.
I wear a toque every now and then. I was crazy heavy into Nortel stock for a while.
You're really funny sometimes.
If I sold Lucent, they punched me. All that kind of stuff. I love Molson. So there
you go.
They rubbed off on me quite a bit. I can do nothing but buy natural resources. I can never sell them. All those kind of things.
The influence from the north.
Yes. Uncle Mike has a little bit of Canadian in him, too. I could tell by his gold and silver fever. Anything you want to add here for our friend, Mr. Ham Shack, Uncle Mike?
No, I think you summed it up. But you got to factor in everything when doing so, and shorting stock is definitely not free.
Yeah, let people come in and think, oh, market makers can just I can buy the options and get a free short. Doesn't work that way, unfortunately. All right, and that is going to do it for the old mail block, and now we're going to roll right on into our final segment of the week, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is where we dive into what we're watching for the rest of this week. And Uncle Mike, since you're mobile, you get pride of place. You get to go first. What are you watching for the rest of this week, into the weekend, and early next week?
Got it. Well, I want to see if the SPX breaks 1,800. I think it's going to be interesting to see where we're at. We're at a key number level there. We're also at a key number level on the NASDAQ, touching the 4,000 level. It's been 13 years since it touched that, and so I'm really focused on the numbers themselves right now, and this is a fascinating market whenever we get up to these levels. Just once again, I do want to remind folks, there's never been a better time in the history of all trading to sell right now.
So you're essentially advocating all of our listeners to go out and just blast out a bunch of naked 1,800 calls in the SPX, preferably the weeklies. That's what you're saying?
No, I'm just stating a fact. There's never been a better time in history to sell your S&P index fund than right now.
Or they should naked do some combos out there on the 1,800 strike? That's what you're saying?
No, I'll add to that a little bit. I still think that just buying call premium, I am still bullish myself personally, but I think being long call premium is the way with which to do it right now. Because that way, if we do get a snapback, and if I'm dead wrong, you didn't have to pay that much to be long.
I love giving you a hard time, Uncle Mike. It is just.
I know. I'm a glutton for punishment because I keep coming back.
Speaking of hard times, Mr. Sebastian, what are you watching for the rest of this week into the weekend?
I think you're going to see some weekend decay for the next couple of days. I think you're going to see a VIX with an 11.5 handle, 11.5-ish by the end of next week, all other things being equal. And, that may be, we may be seeing the highs of the year in the next week or so. So that's what I'm watching for.
Again, another one blasting out the combos on the 1,800 level in SPX. So two of you aggressively bearish.
Excuse me, in blasting out the combo in the double short ETN.
I'm sorry.
It's kind of story straight.
I take that back, sir.
Thank you.
Humbly apologize. All right. And with that out of the way, that is about all the time we have for this episode. But before we go, let me check in with each of my cohorts, my partners in crime, one more time to see what they have cooking. Again, Uncle Mike, you're on the go, so you get to go first. What is cooking in the land of the TNT?
We have a special webinar coming up this coming Thursday, but I'm not going to reveal the source or the speaker until next Monday. I'm that excited about it.
Ooh,
a little bit of a tease. It's like you've been doing this radio thing for a while or something. All right, thank you for that, Uncle Mike. And Mr. Sebastian, a little birdie, traitorous as though they may be, has informed me you may be doing a pretty cool event on the Day of Infamy, a.k.a. December 7th.
Yes. Obviously we honor veterans, but good way to spend that morning is with some education. And you, me, Andrew, and probably one more, our partner sponsor will be presenting a nice 4 or 5 hour class on that Saturday, priced $138, but you and I have each put out little deals to our individual people, but $138, I mean, I'm done giving specials in the next couple of days, so $138 is a deal you really can't beat, so get yourself signed up.
Yeah, for that much education, it's really kind of hard to beat. That's pretty much a jam-packed afternoon you're getting there, full of education with some great stuff, and of course, a Day of Infamy. What better way to celebrate the Day of Infamy than to spending it with the infamous one himself, good old Mr. Mark Sebastian. I will be there as well as good old Mr. The Rock Lobster himself, a.k.a. Andrew Giovinazzi, and perhaps even a special guest. So we've already got 3+ hours, 4 hours really, of webinar lined up for you, and we might have even some more coming in. And I mentioned before on my site and on this show, if you sign up, then I'll even throw in, a lot of you guys are looking to get access to all that great media we shot at our Unusual Activity Forum back in May at the CBOE, including some great behind-the-scenes interviews we did with all of our panelists and all of the panel audio, panel videos, presentations, all that stuff. It's never before been available, not even to the people who attended it. We kept it all locked down, and we have it all set up now and ready to go, and it's going to be great and ready for you guys when you come in and register for our great December 7th Options Educational Extravaganza. You can find out more at theoptionsinsider.com/events or surf on over to optionpit.com and you can check out the events tab there. A lot of places you can find out more about that. And on behalf of the Greasy Meatball and good old Uncle Mike and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing and for sending in such great questions. Keep them coming, and we'll see you next time right here on The Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.